This video is brought to you by the award-winning prop firm, Crest. Folks, if you've ever wondered what makes up a candlestick, how to trade them, what traders are actually doing or thinking when a candlestick is formed, then this is the video for you. So Navin Prithyani, who we did a podcast with, link below the video, is about to break it down in about 10 minutes and give you a full-on masterclass on candlesticks. So let's hear from my sponsor and then get on with it. Crest is an award-winning prop firm that funds traders with up to $2 million and offers generous profit splits up to 90%. So one thing that really sets Crest apart is their no minimum trading days requirement on their challenge and verification stages. On top of that, traders who successfully pass the challenge and verification stages are eligible to receive a bonus payout of up to $30K on top of their funded stage profit split payout on performance. And be sure to use promo code TradingNut, all one word, to get 10% off your next challenge. Click the link in the description below or the card above to find out more. Now, what about from and we'll wrap up on this one, but I mean, what about from a candlestick point of view? And I watched a couple of videos of yours today where you went over candlesticks, and like in particular one was a higher time frame candlestick and what that actually looked like underneath. And also you started breaking down like candlesticks from like a location, strength, and some other things. I actually didn't get to the end of the video, but I'm wondering if you could break that down. Like, so yeah, the other things to look for instead of just it's a doji or it's a shooting star or an engulfing pattern, to give it context so that people can use them not just when they see them, but when they're doing something special.
Yeah. Okay. Well, I do the same thing. I take the candlestick back to the pixel kind of thing. The same logic is, well, what is a candlestick? We can go back in Japanese rice trader, all that. Okay, fine. But a candlestick in essence was not made to be traded right there on the spot on the 5-minute chart, going up and down, up and down, up and down. That's not, it's used like that. That's fine, but it's not what it was intended for. I don't want to go to the markets, and this is ancient days, pre-computers. I don't want to go to the market or call up a friend of mine and be like, what happened in the market today? And have him explain to me, first we went up in the first 3 hours, the price went up to this price. And then the next 4 hours, it went down here, and then it bounced up, bounced down. And then I'm here like frantically writing all these prices down. A candlestick pattern is a representation of what happened in that period. So when people are trading a candlestick pattern on that time frame, it is incorrect. A candlestick pattern to be traded is to show you what happened below. So when the Japanese rice trader, when he actually made the candlestick pattern, I want to know what happened in the whole day right now. So he's actually interested in seeing what happened intraday through that one entire candlestick and be like, got it, I have an idea. Okay, it's not like, therefore tomorrow the market will go up. No, it's just, I have an X-ray vision. Yeah. So if we bring that to life a little bit, so when you see a particular candlestick pattern, so let's take a look at this one right here. This is a very popular look of a candlestick pattern, one of my favorite ones as well. Now, what that means is it has nothing to do with this time frame at all. What that basically means is on a lower time frame, when the market opened, it went up, it slammed down lower, and then it closed, right? That's basically the design of it. And that's how it looks, right? That's how you get that little red candle looking thing. Okay, so inside I can see whatever this range was, it got slammed upwards, smashed right back down, and it closed. Everybody up there got trapped, whoever followed that range breakout trade buy. With the logic, we're looking at it like, whoa, the discount got slammed down. And now we're here watching this thing saying, let's see the discount come further, putting together, when that candlestick shows up, I know what happened in the universe below. In the universe below, someone got murdered, unfortunately. So let's bring that to light here on the 60. This is that spot. This is what's also referred to like railroad tracks. So what happens is a moment like this gets recorded in a human mind where market goes down, and then it pauses. if it pauses and the activity slows down, people get bored. People get bored. They don't know what to do. And then the moment it pops, everyone's like, I have to do something. I have to do something. They run after it. So range breakout traders, they're on the buy side. Support and resistance traders, they look at this as, okay, that's the trigger for the buy. And when the whole thing comes coming right back down and closes, all those people who bought above that range, they're trapped. Their money is gone. They're not going to get that back. Right? And that we see with that coming to the 60, we saw it directly from the 4 hours saying it's go time. So it's not because it's that pattern that makes it go time. It's because we understood what's happening below. Below, a war just happened and things went haywire. Okay, so it's basically understanding that, and that's what a candlestick pattern is meant to do, is to show you the universe below. And on this time frame, it's like what happened in the universe below in this right location, and that's sort of like, okay, now I can use it a little bit. So it's a huge misunderstanding still. There's books being printed on different patterns, and when you see this pattern, you buy. When you see this pattern, you sell. Like, unfortunately, the intention is right, but the logic is incorrect.
And for, like, I suppose a pattern, if we'll sort of wrap up on this, like, if there was a pattern that you'd say is in a location that was advantageous, how would you describe that? Like, that location?
Yeah. So a pattern, a good looking pattern in a right spot basically gives you a further confirmation of someone messed up in the wrong direction. When someone messes up in the wrong direction, that's generally something called a liquidity grab. Okay, what happens is, let's put it this way. Okay, I'm going to try to explain this as best as I can. Okay, it's a little bit more on the advanced side, but I'll explain it in a way where I think it can be well understood. If we use the same example of the Aussie yen that we were seeing, it's a downtrend, then a discount started to come up, then the discount started to fail and start coming down. Now, if you know the discount is over and the player who didn't get filled here is starting to get filled here, right? He's starting to get the orders after he gets his wonderful discount, right? Right, he's getting his discounts and he gobbles up a little bit, more discount, gobbles up a little bit, more discount, and he gobbles up a lot. And we're like, he's back. He's back. I can see it. I can see his intensity on this move. That gives me an idea of he's here. Now, following that is when it does this, and then it slams down, we have the start of the engine through FOMO traders. The engine begins with the FOMO traders. Everybody will run after this because everybody has some level of knowledge. Once they have that, all stop losses are here. So what happens to a individual who basically is looking at this and saying, I want to sell this as much as possible. Remember, this guy needs a lot. He needs a lot. And it's starting, but he's not getting enough. By creating FOMO, you can even take the agent's money. Because the agent will sell it. He'll put a stop loss up here. The price will then jump up, snag him out. Now all these orders are floating around that are into the market. And he's like, thanks for the extra last minute cash. I'm taking all of that. Let's roll.
Yeah.
This part right here is basically their order building. They're, in urban Forex, we refer to this as a dash of evil. We've been talking about this for a very, very long time. This is something like you have to wait for. Like, as much FOMO as you're getting at this point, like, oh my God, it's leaving. Wait, it's going to come, and it's going to come worse than it was before.
Nice. That's a great little scenario there that I think, it plays nicely into what you've just shown before on that 4 hour chart with that grab and then the dash at the end. And I love the name for it as well. All right, folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above. Hey, look,
it's I couldn't teach it any other way. Like they want a gimmicky word. So I'm like, okay, dash of evil. And suddenly all the ears go up. Like, oh, yeah, the big word, screw them.
yeah, the dash of evil. Everyone's going to remember that one.
I really remember that.
All right. Well, look, Navin, thank you very much for coming on the show once again. 200 odd episodes on. I can't believe it. But yeah, really appreciate it. Thank you very much. Before we wrap up, what's the best way for the folks to find out more about you and everything you're doing over there?
So our YouTube channel would be the best way to reach out to us. We also have Instagram, not so active, I don't show my ass as much, but YouTube is the best way, at Urban Forex on YouTube. So
Brilliant. Well, look, a big thank you to Navin for sharing with us today. Everything we've discussed here, along with any links he's mentioned, are in the show notes. To find them, simply search for Navin in the search box on tradingnut.com. Until next time, wish all my listeners trading happiness and success. Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot.